Welcome back. We're joined now by financial expert Barry Watts for this week's edition of Money Matters. And today we're going to talk about avoiding investment losses. Good subject.
Yeah, and a lot of people fear loss, and it sort of incapacitates you because it's a very frightening place to be. But talk us through how we can keep from losing money and how we need to start thinking about this loss.
Well, it's very important to be properly afraid and respectful of loss, because I like to say losses hurt more than gains help. In fact, there's a slide we've got that we can show you on the screen. You'll notice this demonstrates what we call the arithmetic of loss. Imagine on the left-hand side that you start with $100,000 and you lose 50%. At the end of that, your 50% is going to be worth $50,000. Now, the magic question is, what type of gain does it take to get you back to where you started? If you're now at 50,000, you need to go to 100,000. What type of gain is required? A 100% gain.
Yeah.
So a 50% loss has to be offset by a 100% gain, and that means that losses hurt more than gains help. Therefore, the first rule of investing is do no harm. It's just like the Hippocratic Oath that physicians take.
Right.
And so in my business as a wealth advisor, it's really important to strive to do no harm, and sometimes that's difficult in the markets.
how do you get past that? Because you think, well, you know, it'll come back, it's okay. Do you set a limit and say if it drops below here, I'm out?
Well, that's one way to do it. You know, the notion it'll come back, well, maybe or maybe not. We've been waiting a long time, and we are officially back now, I must concede. But in 14 years, we've only made money in one of those 14 years, really. We're barely above where we were in 2000.
Well, I mean, you've spoken before how much longer getting back to where you were takes than losing.
Yeah.
How is it that most people lose money?
Well, let's put our finger in the dike and stop the dam from leaking. There's another slide we've got that'll show you a little image of that, I think, that will be helpful. You'll notice we've got a faucet filling a bucket. Now, a faucet is all the ways that you make money. This is how you're gathering financial assets, and the bucket represents all of your different accounts where you hold those assets. That could be your IRA or your mutual fund account, your 401k, your bank account, all those sorts of things. And what I want you to realize is that your bucket probably has some holes in it, and we want to plug those holes. Now, the first of those holes that we want to talk about is procrastination, just not doing anything. For example, I've been saying to you that I think the markets are at a high and they're ready to turn backwards. At some point, I'm going to be right about that. And when that happens, if you've not taken action to protect yourself, procrastination will have cost you. So that's the first hole in the bucket that needs to be plugged.
All right.
The second hole in the bucket is inflation. Now, we know that the cost of living increases by about 3% per year in a typical year.
Right.
And so if you'll think about the cost of living appreciating at 3% per year, if your investments aren't at least keeping up with that, then you're running backward. You effectively have a hole in your bucket because your money isn't able to buy as much as it was the year before. And so you have to invest in such a way to offset the inflation hole that is in your bucket.
All right.
And what's the third one?
The third hole in the bucket for most people is taxes.
Yes, which is what frightens me.
Every year.
You know, one of the things that I like to say is when it comes to taxes, you can either pay taxes on your seed or you can pay taxes on your harvest. If you'll think about it, the traditional IRA concept has you paying taxes on your harvest, not on your seed.
Right.
But you know, it only takes one kernel of corn in the ground to grow a stalk that will have at least 2 ears on it with hundreds of seeds kernels on each ear. Therefore, there's a lot more to be taxed in the harvest than there was in the seed to start with. So if you want to eliminate taxes, it might make sense to pay tax on your seed instead of paying tax on your harvest.
So you need to plug at least one of the holes in the bucket, if not all.
Well, you can. The fortunate news is you can plug all of them simultaneously. But yes, you should start looking at the holes in your bucket and trying to plug those, because that's the first key to success.
In other words, don't mess around with the first one. Don't procrastinate. Get
right.
it done.
And then you'll get to it.
Let's get on it starting today. That's exactly right.
All right. Thanks, Barry. Appreciate you being here. If you have a question or topic for Barry to discuss on Money Matters, just email it to moneymatters@color10.com. We might just talk about it on air. We'll be back with more right after this.